Hope everyone's having a good week. So let me just kind of run through charts here to see where we are now, key liquidity pools as we approach, of course, the PM session, but the 150 macro is our next time window of interest. So to start off, I probably won't be talking here much. I'm just going to run through and then I'll give my thoughts. Okay, so just hang out for a sec as I look through the markets. And I'll discuss the trade I took this morning. I posted on Twitter, but I'll put a review together for it tonight. All right, so we're building this range for lunch session here. Lunch high falling just short of that daily bearish order block mean threshold. I'm referring to this here, right? So we wicked beyond this morning mean threshold a bit, but where do we go? 75% now. Of course, the better delivery in relation to a higher time frame PD array that we're watching of significance. We want to see mean threshold respect, but it can still do this, right? And the main focus of today and just the candles going forward is if a candle closes above mean threshold of that order block. We don't want that to occur. Okay, so obviously it doesn't look like that will occur today, but we shall see. Just to clean this up and keep that on there. So if you guys were in the call last night or watched the recording from our recap, okay, this was the potential scenario we were talking about occurring for today before we roll over. Now, of course, actually I'll touch on that in a second. Let me go through markets here, right? But we have this SMT, right, in relation to Monday's high. You can see ES there making the higher high. NASDAQ here failing, and I have a template here, right here. So this is your SMT. Okay, so now what I'm really looking at, on the 4-hour chart, if we were to come down here, just going forward and close below these consecutive up close candles, I would look at this as a high probability bearish order block. Same thing with this is what I'm looking at. These two consecutive up close candles here on the 4-hour chart on NASDAQ. Okay, let's just continue before I get carried away with this to just run through where we are now for today's PM session. Delivered down to this fair value gap. We did engineer these lows. Bounced off 50%. Okay. So right now they're building this range. Lunch high. If we're just looking at the lunch session, of course, lunch low is here. That level 20,044, 7 even. Okay, lunch high formed right at 12:02 p.m. Eastern Time, 20,528.75. Right, that is your external range liquidity. If I'm just looking at this fractal price for the lunch session, what I do see here is these internal highs, right? And I guess I should just put this on. Right, I'm looking at these as an engineered buy side liquidity pool, and I'm referring to these highs here and in this high here falling just short. Okay, building liquidity during the lunch range, this low here, that low falling short, and then if we're going to just continue, we see them building the range even more right here. So we'll see what we get. We have the 150 macro in the next 7 minutes or so. New week opening gap. Okay, after my first sell-off, I was done. I walked away from the charts. Okay, got below new week opening gap, spent some time above and below it. Eventually, of course, now got above and expanded for lunch high. Okay, I'll review this in a bit. This is my first time looking at this price as well. $10.10. Okay, SMT down here. Right here. Okay, if we see, just looking at S&P, if we see a little push in the markets, lunch high on ES could be the draw. I like how that 930 fair value gap is right there. Just get our session liquidity marked out so we know where we are with in relation to the range. Okay, this is not intraday equilibrium anymore. It was this morning. So S&T at the lows, ES making the lower low here in the 1 minute time frame, closure above this down close candle after the SMT. What do we classify this as? Someone tell me. Order block after SMT. Yep. High probability order block. T-Spark nailed it. Savage. Okay. NASDAQ. Did we get this close above? Yeah, we did. Right. So now, it is still, of course, in SMT here, and just for review sake. When we do have SMTs, I prefer to see them not just subjectively bring it this low, because I'm still, as you can see here with this chart, I'm still looking at this as an engineered sell-side liquidity pool, whether it's today or just going forward. This is significant to me here, 20,365. Of course, beyond, you can see that fell just short of London low today. So what I'm really waiting to see now for the 150 macros, if we have a run on liquidity, do we show signs of a reversal? Let's run through, it's 146. Let's run through our time frames on S&P a bit more, spend a bit more time with it. Okay. This bearish order block up here on ES. So I mentioned last night on NAS, we're still stuck within this range, and this order block was something for us to monitor as well for a potential bounce, and we did see that. So now we're jammed between the bearish order block and the bullish order block. Price cannot get above here in order, if we're going to roll over, especially because the market's been so strong. This high needs to stay intact, in my opinion. That's what I would want to see with the SMT at the highs, and now the SMT right here in relation to Monday's high. If we continue back to the hourly chart, okay, now even with ES, you really don't want to see it take this high, because we've already had the SMT at the highs for the short scenario to play out. Okay, so a bit of a retracement after this initial sell-off. 148. Okay, so let's get ready for, all right, and also zooming out, S&P does not have delivery to its 930 fair value gap yet. $930 fair value gap is right above mean threshold of that bearish order block. Looking for clues, looking for signatures, waiting for time and price to align. And we'll have that macro window in about 1 minute now. How'd you guys do today? Good? Crazy dump right at open, right at 9:30. Just ripped it down. Over 100 points. Solid day, nice. Legend. London was nice, cool. Okay, so identifying order flow, right? I spent a lot of time in the past couple streams talking about how I view the market this way and just what your job is as a trader, right? We're trying to identify order flow, bullish or bearish. What are we seeing from the market, right? This 1 minute fair value gap right there, okay, right at the start of the macro, we utilize that fair value gap to purge that pre-macro engineer buy side liquidity. Okay, so we're within this macro window. Okay, if we're going to see continued bullish order flow, we want to see this continue to support price. This was already delivered to, so if price comes down here and we have this order block nested in it, right, which is also cherry on top within that bullish order block, we shouldn't go below this now if we're going to continue higher and maybe want to drop to lunch high and back to the mean threshold of that daily order block. And just a quick note on that, using the body, okay, just get 50% of this. Okay, and I've just dragged that down, copied and pasted that here, 25.35 even. So right now we just went above, right at 150 macro open. Now what you would want to see if we are going to reverse here, we'll take a look at S&P as well. Displaced through this, it's a macro inversion. Displaced through this here. That sent us higher as a high probability bearish inversion. And we're looking for the candles to close. Okay, so about 20 seconds till this candle's closed. And then of course, if and when we were to close through this, right, you really, since if we're looking at this leg right here, right, below that BISI that I just drew out, the lower orange one, there's no other inefficiencies from that inefficiency low to this low. You'd want to see speed there. You don't want to see it hang out and just chop around in it. Okay, so we did just get a close below this. So right now, we're trying to see if price wants to give up this little fractal, this dealing range that went higher to purge that internal buy side liquidity. Okay, this should be a high probability bearish inversion. And if we are to go lower, now what I wouldn't want to see is price return to that bearish inversion. And if it does start to dig above this, right, and really, you know, there's multiple reasons here, okay? 50% of the SIBI, this aggressive displacement here, moving, I don't know, 10 points or so in 1 minute, okay? With the high probability inversion. Now this is a breaker, high, low, higher, high, and then this inversion up here. So there should be, if we're just going to bleed lower now, no reason for us to come back up here, right? And if we do, like I mentioned, I suspect we'll go higher. Real quick, we're going to go back to NASDAQ, but let's just take a look at ES. So this is 1:03 p.m. right around here. So ES failing to make that higher high. Saw a little baby gator this morning on my run. Just bathing in the sun. macro window, run of the highs above macro opening price, testing this now. So ES, you can see that we didn't have such a clear liquidity sweep in terms of the buy side right at the start of the macro above macro opening price. So what we don't want to see is price close back above here. If it closes above this, I suspect we'll bring it back up to at least this high and maybe want to make that next leg up. Okay, and then we'll see what NASDAQ wants to do in relation to this as well. Okay. And 50% of this leg is right around 50% of that SIBI. So if we do drop there, I still want to see how price acts. Do we reject above there, right? If we're going to go lower now, this should be on top of just the PD raise I mentioned, aggressive buy side, aggressive sell side. So it should be balanced. This should be a protected high if we're going to go lower now. Let me just, actually I'll stay here for a sec as we watch. Just tap that breaker there. It's a nice reaction. Did it tap it? Close. Yeah, to the tick. So the next step for NAS, right? We want to see that high probability bearish inversion send us below this with the candles close. And then like I mentioned, you don't really want to see it hang out here. You want to see speed down there. Because we just have a bunch of lows here. And all the inefficiencies were up here. And prices at this point showing no willingness to find support there. Just looking at the closures of the candles. Still about 30 seconds till this candles close. Keep a look at ES. ES rejecting off this high probability bearish inversion with the SIBI overlapping. With ES, just looking at it objectively, it would have been nice to see it take out a little more of a high, but just bleeding through these here. Okay, we got that close. So really, now that we're in such of a deeper discount, just looking at this dealing range here, you don't want to see it. I don't want to see it start to come back up in these scenarios. I just want to see it slice through those lows, right? At the highs, this should be balanced right here. Buy side delivery, sell side delivery. Okay, and we're closing below all of these. Man, this stuff is beautiful. Even look at this. You guys see the logic here, right? High probability bearish inversion used to send us higher, right? So you really want to focus, especially when we're looking on the 1 minute chart, which PD rays were utilized, especially during the macro windows, to purge liquidity, because you can identify its initial state of delivery as well as just the algorithm used it, right? You can see that it was referred to complete something, and that is that liquidity sweep. Okay, we close below it, come back up into it. So this SIBI here should be what? Breakaway. We see it every day. We talk about it every day. That's the logic. So because of that logic, what do we mention here? After we had this aggressive displacement on this candle with, what time is this? 151's candle. You expect this to be what? A breakaway inversion. You don't want to see price to come back up there because of this high probability inversion, right? And that all just comes from looking at its initial state of delivery in relation to this fair value gap that we discussed right at 142. And even now, right, we're coming back up to test these inefficiencies. I don't want to see, if they're going to come down to this low and even if we're going to bleed through here, I don't want to see it spend a lot of time down here, as for the reasons I already mentioned. Coming back up to 50% of this leg, this most recent sell-off leg. And I don't want to put a bunch of stuff in my chart. That's why I deleted it, but this one here. Leaving these equal lows still. Okay, so, just as a reminder too, going back to this morning and every other day when you guys see this in the market, it just happens sometimes. Stuff like this. Yes, this was an S&T, right? And it is valid, but sometimes price is going to, let's say you're in a short here, right? Sometimes price is going to come down real close. So it's still important, even when you have clean moves and it's quick, right, to take partials or reduce risk when you can, just in case it leaves that engineered relative equal lows, or if you're at the highs, relative equal highs. Man, look at this. Right at the top there. So now I'm looking at this candle here, the 158 up close candle that's in this order, or excuse me, this fair value gap. If we were to close below that, if we're going to get that next push down, right, beyond these sell side liquidity pools, okay, to lunch low at 20,447 even, okay, you'd want to see that. I'd want to see that close below. Any retracement up, I want to see it offer resistance. So on this candle right here, or the next candle, as long as this swing high remains intact and not delivered to, and we close below, that's my most recent swing high I'd look at as a potential protected swing high. But I now want to see it get below here as it gets ripped to. Okay, but still, that'd be the same logic I refer to. So even still now, I don't want to see it spend a lot of time down here if it's going to get these now. And remember, whether you're in this trade and you get stopped at even, you get stopped in profit, it doesn't go all the way to your terminus, or you miss this move, I always say what? You never know what opportunities are going to present themselves. So there can be a whole lot of lows here that continue to get engineered and left behind, and then maybe 250 macro or later on, right? You get an opportunity to have a clear setup and a nicer trade. Let's see if this is S&T. 159, 201. Yeah, a little S&T here. Now just the same logic I referred to here. This is a really nice move right when we got on for the 150 macro. Again, if you're trading the PM session, or you have to trade the PM session because of work or family stuff, life, whatever reason it is that you can't trade the AM session, whether it's every day or most days or some days, okay, we're reading price the same way. It's this literally the same signatures. And if there's nothing there that price is telling you to do, then you just remain patient and wait for the next setup. So the same setups, the same PD arrays are significant. Whether it's a PM session, right? You're just looking for session liquidity from the prior session first, and that's the lunch session, okay? So again, probably random, right at 150, they go above that. Purge the engineered, the pre-macro engineered liquidity pool, and now they're bleeding through this with speed. Banger move here. Down to lunch low. It's almost like these concepts work, and all that's required in standing in the way from you and your profitability is yourself and your self-discipline and not over leveraging and not doing dumb shit. Right? It's literally just those times. That doesn't mean you're going to have 100% win rate, right? You can have 50% win rate, you can have 60% win rate, you can have 70% win rate, but you still need to control your emotions, and you can be profitable regardless of your win rate. And then as you just embrace, the trading journey, right? And I know that might sound cliche, but your skill set in reading price is just going to continue to improve. And by extension, that win rate, which is just a big buzzword, which is good, of course. You want to keep that, statistic. Sorry, first off, we want to see if we're going to get below the new week opening gap here or not as the next climb down the ladder. Great move. This is one of the best moves of the week, to be honest. This setup unfolding. But you're just focusing on the skill set, right? And when you see clear setups like this and just clean delivery that makes sense to you, you're going to be so grateful that you didn't take a bunch of impulsive trades during lunch hour when it didn't make sense or there was no clear draw on liquidity, right? So, a perfect example of this is, let's say you're sitting at the charts the whole day, right? I was not in this, but let's just say, I wanted to get in the long here, but I hesitate. This is a great example. I wanted to get in the long here, but I hesitated on the high probability bullish order block SMT trade because these were so low, right? I missed out on this, right? It's going higher and higher. And then hindsight, the old me would freak out, try to chase, and then that would be a bad habit I built. Whether it works this time or not, I know chasing more often than not is going to screw me over and hold me back, right? And what do I always mention, right? You have to be detached from these moves that you don't deem as high probability, that aren't clear to you, that you don't feel comfortable entering on and putting your risk on, your hard-earned money on, right? And that's fine, because what I always say, you don't know what opportunity is going to be presented, right? On this whole move up, you don't know that they're going to engineer these clean-ass highs right before the macro. And then you don't know that right at the 150 macro, they're going to run it up there and provide you macro power of 3 setup. You don't know if they're going to do that, right? You can have an inclination, but once that setup occurs, then you know exactly what you're looking for. So you're coming into the market every day knowing what you're looking for, a clear draw on liquidity, right? And see how we can identify this consolidation range. I forget if this was, actually, I think I put it on both my Instagram and YouTube shorts, maybe last week or something, but we talk about it all the time. If we have a consolidation range and relative equals on both sides, the best thing to do, especially with macro power of 3, is just wait for one side to be purged above macro opening price, and then your confirmation of this being a stop hunt and a potential reversal, right, going higher just to go lower, is when you start to see bullish fair value gaps fail. That's your confirmation. So it's liquidity sweep, bullish PD raise fail. If you're looking for a reversal down here, right, it's liquidity sweep, and then you start to look for premium PD raise to fail. And then you see if you can get above new week opening gap, whatever significant inefficiency is in that profile for that move, that fractal of price, that day, that session, that trade. Right? And I'm telling you, if you guys trade way less, if you're still struggling and you overtrade, trade way less, right? Try to take 1 to 3 trades per week, right? Just try to do it. Try to do it for 1 week, next week, if you're struggling. Try to take 1 to 3 trades next week. No matter what, you can only take those. So what are you going to do? Are you going to use all of your bullets on Monday and then not allow yourself, because you're a man or woman of your word, right? You're going to abide and adhere to that max trade rule? Are you going to use all those bullets and saying, okay, the best 3 setups are all going to occur this Monday morning between 9:30 and 10, and I'm just going to overtrade and impulsively enter? No, you're not going to do that. If you're a man or woman of your word, you're going to say, okay, I only have 3 bullets to use this week. Okay, we're below this new week opening gap. So now this is the line in the sand. You really don't want to see price get back above it. here. We are near the end of the 150 macro. Okay. So I can be a little more lenient with it. But as price remains around here, especially, I know it's 40 minutes away, but if we're still around here, around the 250 macro, then it becomes more significant to us. But now, still, what I would want to see for this continuation lower is we've closed below, price doesn't go back above, and we get that next leg down. So this bullish order block was used already to send us higher for this retracement leg. So of course now, if it was a high probability bullish order block on the buy side of the curve, we don't want to see price smash through there. We want to, or excuse me, bounce there. We want to see it smash through there, especially because we have these equal lows. And now I forget what I was saying before, but you guys get the gist of it. Right? If you're taking 1 to 3 trades per week, you're only going to be looking for the best of the best setups. Setups like this. And then when that finally occurs, the whole time when you're struggling and saying, oh, I don't want to wait. This sucks. I don't want to wait. I don't want to wait. I don't want to wait. Once you finally have a great setup and a great banger winning trade, you're going to be like, oh, wow, I get it now. Okay, I can be profitable with even just 1 trade per week if you're waiting for a clear setup, a best of the best setup. So see how we saw speed below all of these lows? So that same logic, it's applied here when you have situations like this, right? We said that we were first and foremost focused on, if we were going to get to these lows here, between this inefficiency after we close below it, right here, and the sell side liquidity pool I have labeled right here, there's no inefficiency. There's just a bunch of lows. Right, so price, that's when you want to see speed through those. That's when you can get the low resistance liquidity run. And that same logic is being applied when you zoom out here to the external range of the lunch range. Okay, looking beyond the initial sell side liquidity pool to the next swing low, there's no inefficiency. There's just another swing low there, another swing low here, and then lunch low. So you want to see speed there. That's why we didn't want to see it come all the way back up here. And admittedly, right, looking back at it objectively, okay, now I'm just getting greedy. But I would like to see this remain open. Why? Because if I take this low at 157 to the high that delivered to a random place, man, this stuff is just actually insane, dude. 50% if I clean this up here is this black line right there. So this would be your equilibrium fair value gap. So when we have that, I want to see in order flow us remain weak and only refer to that. Now we are wicking above, right? So you don't want to trail your stop loss wicked tight in this. Okay, the safer stop would be above here, right? Or you could even do above this order block, because we shouldn't get above this really, especially on a close, right? Closing below the new week opening gap, came back up into it. And just looking at this leg, yes, we've been so aggressive, but there's an inefficiency right here. 207, 208, and 209 candle for your fair value gap, overlapping in the new week opening gap, right around CE, midpoint of the new week opening gap. If we're going to continue lower now, because we're in between macro windows, and this is how I look at it, guys, this is how I reprice. This should be a high probability SIBI. If we start to close above that SIBI and the new week opening gap and just spend some time in it, it could be a little bounce / retracement until we get to, a little bounce / consolidation time distortion until we get to the 250 macro. Okay, so we're testing it now, right? So right now with this SIBI, especially since we just dumped substantially and swept a whole lot of liquidity, I'm gonna clean it up here. Okay. I'm utilizing this SIBI with the 2 chance logic, the 2 chance rule here I've been discussing this as of recent. So essentially, if we are to close above this SIBI, right, and then we reclaim it, getting back below it, it needs to push price lower with speed. And if it doesn't, it's not significant, and you need to wait till the next macro. That's a sign as well that you can use to say, okay, maybe I should wait till the next macro, wait for more information. So there's a lot of ways you can use that to identify order flow, not only with what's supporting price or acting as resistance, looking at the candle's closures, but what you can expect in terms of speed or conditions you want to be a part of or don't want to be a part of. Are you guys like learning stuff? Does this stuff make sense when I talk about it? I need to make sure I'm not just rambling on. This turning point up here, why we want to see speed through these lows, my thought process in relation to new week opening gap. You know, we still have, if we go look at low of day, these relative equal lows, perfectly logical target to expect price to deliver to, especially when we're seeing weakness. I mean, guys, look at this. SMT, order block after the SMT on the hourly chart, come up into it and displace lower. So now it's important to see, you know, if you're reading order flow, and you guys know this now, I know I sound like a broken record, and I'm going to continue to because this is how I read price. This is how I make my living trading, right? Regardless of what time frame I'm looking at, if I see these signatures, I'm saying, okay, what's next? What needs to occur next for the next push down? If I'm looking at this hourly chart, we made this swing high coming off of this bearish order block initially, the high probability bearish order block. This should be a propulsion block after if we're to close below, and you'd want to see that push price lower for the next step. So then you would do things like measure this. You could measure the quadrants as well, like we did with the daily order block. And if we do retrace and dig up into it, you just look at how those key reference points or those higher time frame levels, right, the quadrants in this case, are being worked on the lower time frames, and more particularly during the 1 minute time frame and during the macro windows. That's what I'm trying to say. Man, I went for an 8-mile run and my brain's like jammed up. I can't even think. Okay, so we're testing this now. So again, going back to what I said, I just look for the next step, right? So now, you know, if you're right here, if you caught this banger trade and you're looking for where to trail your stop, you know, still right now I would leave it above this high in this situation. You have the new week opening gap, you have this SIBI, high probability SIBI overlapping CE of the new week opening gap. Okay, I wouldn't trail it to here until we were to close below here, right? But you know, you can do this, especially if you have trouble holding. Okay, you can do this to reduce your emotions, right? And say, okay, I'm locking in profit, right? I'm assuring that I'm locking in that money as the market's making it available, right? But just in terms of what price could do in my experience, right? Until we get close below here, which let's see if we do now. Right, so if you have a runner and you're trying to hold to low a day, this is the scenario I'm trying to discuss here. Because you're seeing this high probability SIBI, now you're seeing that close below, and now if we come back up into this, we should just bleed to the low here, right? So by extension now, with stop losses, trailed stop losses, whatever, now I would look at this as a protected high after this discount inefficiency failed because we rejected off of that, and then price sent below there. Man, closing right below CE right here, 22.75. That candle's closed at 214, 22.50. Working this high probability SIBI overlapping. You guys see the logic? Does that make sense? And again, if price was to close above here, make a deeper swing high, okay, as we get that low there. So it's just beautiful, guys. This stuff is so interesting to see. It's so cool to see. But let's paint another scenario here that I think is valuable in relation to that two chance rule, right? If we were to close above here, right? Let's say we made a swing high, and then on this candle we expanded higher, made one more swing high, closing above the SIBI, but then got back below. Then I would just use that most recent swing high as my protected low. And like I mentioned with the two chance logic, you want to see us bleed below there with speed. And if it doesn't and closes back above, it comes off the chart. Unless it's like a 930 fair value gap or a news fair value gap. So we're trying to see if the draw now is 23,6650, and then just looking ahead, 20,340.25. Can I explain one more time why that is high probability SIBI? Yep, just because we're just seeing bearish order flow. Okay, it's a premium PD array, and then where is it overlapping? It's overlapping within 50% of that new week opening gap, which is that significant inefficiency. So even, let's imagine that the new week opening gap, right, with the same levels here and the same 50% was the 930 fair value gap. I will be looking at this the same way. So you're just stacking confluence, nothing too crazy. And even just looking above as well, just an additional signature. You see how price just came up right here with this swing high to this volume imbalance. Above this SIBI, there's no other inefficiencies or reason for price to want to go up there if we're going to see this next leg down now, which we didn't, which we are. There's a little volume imbalance here, and we have this SIBI, so, you know, as we make more fair value gaps, which is just displacement, I'm asking myself, okay, how would I classify this? Or sometimes maybe I need to be more flexible with this PD array, right? This one, this SIBI at 217 is within the lower portion of this inversion. So buy side delivery, protected high, sell side delivery, and this SIBI here. So if we come back up into this, I would classify this as another high probability SIBI. Now again, if you're in this trade and just when we're seeing bearish delivery in general, as we get lower into a discount, okay, I have not less confidence that they're gonna send us lower. Like if we could come up here and then make the next leg down, you'd want to see that, of course, but you're just understanding that, especially in aggressive scenarios like this, the market can bounce. Okay, so if I was to trail my stop now, really the safest, if you're looking for low of day or London low, let's put this on the chart. Let's say this is my trailed stop loss. Okay. If you don't want to, since we're down here at what, 20,386 and this high is 20,427, right? If you don't want to do that, you can move it down to the high of this inversion. If you want to be a little tighter, right, you can put it above C of the inversion. Of course, the more tight you trail it, the more just likely it is for you to get stopped out, right? And that just comes with you being okay with, okay, I'm this much in profit. If it comes back and stops me out and I miss the initial, 10 points of my runner, it's okay. Check what our friend here is doing. He is close to the low of day. I don't think ES is near its new week opening gap, right? No. All right, I think ES 5,850, just going forward, we need to see it close below this next step, 4 hour. engineered internal lows. We have internal sell side liquidity down here, and just going back up to the daily chart, that daily BISI right there, 850. That BISI high is also these equal lows there. So there's reason you're stacking confluence, you're building your narrative to say, okay, it makes total sense for price to want to reach down there next, especially after the Kraken correlation, and especially if we continue to see bullish PD rays, bullish fair value gaps fail to support price. $224. Just going to come back to this in about 4.5 minutes. Seeing a bit of a bounce here. Nothing's really changed with where I would trail a stop and what I'm looking at here. Yeah, flip. So just because if we're looking at a potential balanced price range, you're just looking to see what has buy side delivery and sell side delivery. Okay. This SIBI is just in the lower portion of that. So it should be BPR, especially because we had this reaction, and it's in the lower portion of the inversion. Okay. I do want to mention though, like I mentioned, we are in such a deep discount and have sold off substantially, right? We do want to see a reject. If we reach up into that, we would want to see a reject, but keep in mind we are between the macro windows. So it's 226. I kind of have a rule where as we get to X30, so in this case it would be 230, I really prefer to just wait for that next macro, especially if I don't see clear setups, clear signatures in order flow that suggest to me something to occur in price that I want to see in terms of a trade or a continuation on a runner or something. Because again, right, an opportunity was provided in the 150 macro. This is, of course, like obviously, how much does this move? Way more than enough to be satisfied with. But this here, this low, they could just be setting this up for the 250 macro for potential continuation down. And they could just use the next 20 minutes or so to chop people around or have a retracement. So we delivered to the low of the inversion. We didn't quite get the SIBI. And I'm using these SIBIs just like I did the first one, the 2 chance rule. So still just, not zooming out because it's still on the screen, but the line in the sand per se is still just a new week opening gap in this structure. You don't really want to see it get up to this high. What we can do now is measure this range. We just delivered to premium of this last sell-off using that 2:14 p.m. high as your dealing range high in the current low of, I guess not low of day, the swing low of 223. Small BISI here, but we'll see if this fails after delivering off this inversion to the tick. Dude, the algorithm's on crack right now. Yes, the draw is still low today. Just engineering sell side liquidity. Again, it could just be waiting for the 250 macro, right? And that's how I would look at it. That's my perspective on the market. So whenever you always want to be objective and stuff, but especially after you see a clean move, winning trade, or you're feeling FOMO from this move, whatever, and you identify a clear sell side liquidity pool, right? These lows from earlier in the day were enough, but now you can see even more engineered sell side liquidity. Okay. It's important to remind yourself, yes, we're seeing weakness. Yes, we're seeing clear engineered sell side liquidity, but we still need to wait for that setup if it's going to come during the 250 macro to suggest that we're going to continue at that time and go lower. In other words, you don't get trigger happy. Just waiting for some more data here. See if we close above this. 2-chance roll with this one. We do get that close above, so that's a reclaim BISI if we're just classifying it. And this is a good example. So if it closes back below this BISI, and this is what I'm referring to, of course, this one that's dragged it, I'll change the color. This blue box. And we return to it, it needs to reject away. So see how we're getting right back below it? Still have some time till the candle closes, 30 seconds, but if we close below, then back above, back and forth, it just comes off the chart. And that prevents yourself from, on the 1 minute time frame, getting lost in so many PD arrays, as of course more candles print on the 1 minute chart opposed to a 5 minute, 15, so on and so forth. So we're right back below it here. So now if we do return to it, it has to offer speed. We have these consecutive up close candles here. What you'd want to see, again, if you were holding a runner for low of day, I wouldn't even want to see it get back up in there. I want to see it just touch those order blocks and go. Okay? Especially why? Because time is significant. Look at the bottom, 233 between macro windows. We're understanding that time distortion is more likely, right? Not 100% certain. Doesn't mean as soon as a macro window ends, you sell a trade or don't watch price or whatever, right? It's just part of your trading repertoire. We worked that order block here, these consecutive up close candles. Even looking at this here now, so this was a SIBI and a deep discount. So right now it's classified as a bullish inversion. You want to see price slice through this if we're going to go down to the low now. And you can use that same 2-chance model for this. So it's applicable. So if we get below this now and return to it, I want to see speed away from it. If we don't, it comes off the chart. And we're focused on the bodies, right? Because this right now, this is a bullish inversion until we close below it. It's the only thing standing away from current market price in this low. And then of course, low of day here. So we want to see a slice through this. We'll see how aggressive this candle is, or if we even close below there. If we close below there, this SIBI, I want to see this volume imbalance not be delivered to. And again, if I was trailing this, I wouldn't trail my stop that tight. You don't have to be some wizard every time for this. You still want to give it room to breathe. I'm just reading order flow, especially when we're seeing the algorithm on absolute crack right now. We're looking to see what it provides. So 8 seconds till this candle's closed, and we slice through it. Bingo. So a little speed bump there at that inversion right here, right? That's the only thing blocking price from getting, again, there where it was at the time to this low. Still falling short. Okay, I'll wait. Okay, there we go. There we go. Bingo. So see how he, popped right through that after? See how just because we close above this bearish inversion at the time, right here, after delivering randomly to the tick, the exact low of this inversion, right? Look on the right side there, 20,404.25. The swing high is that exact number, 20,404.25. So if you're in a trade or just reading order flow and you have something like this, because we're in such a deep discount, you don't freak out and say, okay, we're definitely going higher, or I should reverse and go long, especially when the market's this heavy, and especially when we have all the engineered relative equal lows down there. Okay. You're applying that 2-chance rule for this. So what did we say here? After we close below here, did we want to see price come back up here? Someone tell me yes or no. When we close below at 232, these consecutive up close candles, did we want to see us come back up here to this blue box? Correct. We wanted to see that propel price lower. Look what it does. Close, open, and do it lower. Only thing standing away with it was this. This was a little speed bump. Okay. And now we're recovering, right? So here, right, just adapting. We'll continue to adapt. That comes off the chart because it failed the 2-chance rule. But we purged the lows here. And look at this reaction. Crazy. Same thing with this here. Let's look at S&P. S&P still didn't get the low of the day. Man, what a great move. And where did it start? 150. After doing what? Building a range with equals on both sides. It purges one side. And what is best case when we have that? You want to see it purge what side first? You want to see it purge the highs because it's against the trend of the day. Yes, we had a retracement, but we're so aggressive. 5 days all the way up here. Okay, if we are to recover here for a bounce, it would be a large, just what I'm looking at now. Let's see what we get. I'm going to kind of delete these and adjust. So this is a roadmap back to this swing high I have. This is what I'm going to look at first. At 214, that level is what? 20,427 even. Low, high, lower, low. All these consecutive up close candles. It's your bullish breaker. We need to see a close above that, right? With this is a BPR down here. Balanced price range, sell side delivery, buy side delivery. If we close above this before returning to this, I wouldn't want to see it get down to the BPR again. It should be balanced, right? And it would be in the lower half of the breaker. And I'm using every consecutive candle's body, 224, 225, 226, 227, and then 228, we have a down close candle, so it ends there. Okay, but if we do close above, this should be a high probability bullish breaker. Okay, now we have to watch how we act here because we're in such close proximity in relation to this, right? We first and foremost need to get the close above. Okay, so I'm still watching this BPR here. If we deliver to it before closing above, how we work. If we close below it, I'll suspect that they're going to bleed us down again for a low day. ES might be getting its low day. You might want to go down there too. Okay, but I would be looking at this, if we were to close above, as a high probability bullish breaker as we test this PPR, because this low fell just short of these clear lows. So there was inducement. So early longs would be trapped out and then shorts would be trapped here. But we never got this close above. So we're testing this PPR. So I guess just to be clear, right, that stays off the chart until we see the candle close above because the bodies tell the story. So about 8 minutes or so until the 250 macro. Building some clean highs here ahead of the 250 macro. Highs here, and we did tick that inversion low, but it's still falling just short of that SIBI. So, we ran substantial sell side liquidity. Okay. The highs look a little suspect, but we'll see. Right now, at this current moment, my focus is on the BPR here. That's what's important to me now. Man, this is fun. You guys having fun? It's so cool to see this stuff, man. And then I know I sound like a broken record every time we get on at some point, but once you master your self-discipline and your emotions, right? It's just a waiting game. It's literally just a waiting game because you know what you're looking for and you know you have a time schedule to look for them. I literally got back from my run like 3 minutes before I got on. And then an opportunity comes. But an opportunity could have just not came. So you literally have time windows that you can say, okay, let me go check what the market looks like. And as you gain, not to discredit the importance of preparing for a session or a macro or a trading opportunity, whatever, you still need to do your due diligence and you never want to rush it. But as you just gain more experience, you know what you're going to see quicker, right? You're going to be able to say, okay, this looks like it's going to do this, right? Like right when I got on, we were saying, okay, we built this range, we ran above the highs, and now we're starting to see these fail. Same PD arrays we classify as high probability every day. Okay, but you need to also understand that an opportunity could just not come here. Or it could be presented and you take a loss. And then what happens? You're grateful that you don't over leverage, and then you just wait. You don't freak out. If your max trade rule gets hit, you close the charts. So this BPR supporting price so far, 6 minutes until the 250 macro. These two up close candles, if we close above, on top of probably what would occur would be the breaker that I discussed. Okay, that would be a high probability breaker with high probability bullish order block. And I'd expect us to try to get at least back to new week opening gap, and then I'd want to see how we work in relation to these. inefficiencies in whatever structure presents itself. So we're just waiting here. And again, just over 5 minutes until the 250 macro. Yeah, Hades, it's daily work, and you never don't feel emotions. It's not like that. You just learn to accept them and master them. Right? You're saying, okay, I'm feeling nervous because it's halfway to my target and it hasn't gotten there and it's moving back against me. Okay? But I know I've been here before. I know this is normal. I know it's just my mind just naturally going into that state of emotionality, getting a bit nervous because money's on the table. Right? But I know your job is to do what? Do your best to remain as objective as possible and focus on price. Focus on what the market is telling you and be detached and say, okay, if it comes back and stops me out, it's just one little paper cut. Or if it comes back and stops me at break even, I'll be glad it got me at even and didn't stop me out for a loss when it was halfway to my target. And once you master yourself and you know what you're looking for, oh boy, you're in a really good spot. Nothing's changed in relation to what I'm looking at here. ES just chopping around. ES has liquidity on both sides, buy side here, a lot of highs, and then the sell side. NASDAQ, yes, got the low, but shallow. Okay, so let's see what NASDAQ does here. We purge these highs I had marked out. Trying to see if we're going to close above this. Order block here. It's going to look like I'm drawing a million things. So I'm looking at these consecutive down close candles as high probability bullish order block because it's nested in that balanced price range we mentioned down there. Sell side delivery, buy side delivery into it, purging up to the highs. So we got this close above, and I think we did get a close above this breaker. Yeah, we did. 425 came right back down into it. So for step one, we need to get above this SIBI, and really, especially since it's not the macro window yet, and especially because it's against the trends, you want to see just speed up through here. Like, that's how I'm looking at it, right? This is a big ass chunk of price action that's against this potential long bounce. If we're going to get up to this high, and let me do this high that's been circled right here, we need to see us displace through all of this structure up here that we're testing right now. The SIBI is good. I want to see us close above CE of the inversion, which is that black line, that orange box, and we just want to see us expand up there, right? And this is a high probability breaker because of the stage 1 and stage 2 liquidity, as I mentioned. So we got that here. 2 minutes till the macro. You guys see how the algorithm works? Isn't it crazy? Right? We are at the new week opening gap. We still could reject here. What you wouldn't want to see is now this high probability SIBI that we classified before got closed above. It's an inversion. So we don't want to see us get back below it, especially since we're so close to that macro, and I'm applying still the same 2 chance rule. So right now, if you took this breaker and you really want to be tight with your risk in these types of trades when we're against trend and against between 2 key areas, right? When we close above a premium PD rate like this, if you want to just move your stop to even because it's inversion, you can, right? You're going to get stopped out at even sometimes. You have to be okay with that, and that's just what you're comfortable with. But just this initial push, you can say, okay, we got this, and I know we're testing a new week opening gap, which is so significant, and already showed us what? We closed below and pushed us lower. So we know that we can reject out of here. So just in case I'm wrong, you can reduce risk. So 30 seconds till the macro, we see what we get. Just checking on S&P real quick. Running these highs. So again, kind of building a range here ahead of the macro. Okay, and these really, honestly, these reads here can be a bit difficult because to a premium, I can argue that this is a chunk of price action that we did utilize to go lower and that we could reject out of. But also here I can say, okay, we have the high probability order block of BISI on top of that order block, the high probability breaker. I can argue both scenarios. So whenever we have something like this and we're jammed in between, it takes really more for me, and I don't like to put too much risk on because I can argue both sides of the market, what could occur, right? And we always say you want it to be difficult to argue the opposing direction. So right here, we're still seeing, best case, this remains open, this lower BISI, as a breakaway at 246 because of the inversion. I'd want to see us reclaim this orange box here. I'm going to drag it out a bit. This furthest one here. I'd want to see us close back above that because look, it was initially a BISI and then was utilized as an inversion to send us lower for that next leg down. You want to see us reclaim that. Is this making sense, guys? I just need to check in every now and then to make sure I'm not just speaking a different language. But this is how I read the market. It's how I look at these candles. And guess what? And this is actually a very important fact. I'm seeing it test this CIBI again. When you do take that loss, once you get to the level of reading price and you see delivery like this where it's so precise, it's important for you when you do inevitably take that loss to not freak out because your brain is just going to naturally say, wait, this is unusual. I'm used to seeing these signatures play out beautifully. I'm used to seeing my profit go up, not go down. I'm used to seeing me take a win, not a loss. I'm used to feeling good after I push a button, right? And after you take that loss, because you usually win, right? It's going to feel like like you're some trading god and that you can get it back right away. And in those moments, you need to walk away. And if you can do that, you're profitable. Trust me. Trust me. See if we get up to that high. I'm glad we did a PM session stream today. This is fun. I'm having fun. I feel like I'm in a nice little flow state right now. I didn't even have any coffee. Okay, we got that close above. Fell just short of that here. I didn't even mention when I was yapping in that macro window. So we are above. Macro opening prices here. I know there's a lot of stuff in my chart here, but it's still valuable. Okay, so we're getting above here. Equal highs on the S&P. Above macro opening price, which is right here. So you'd want to see this BISI take us higher. That's what I would want to see. To that high. We already delivered to this BISI. This is a reclaimed fair value gap. So what do we want to see? So we're applying that kind of two-chance logic to this inefficiency. Let's change its color again to make it super clear. This yellow box, initially a bullish fair value gap at 213. Okay, so we want to see signatures of strength from that. And just, it's just common sense. If this secondary BISI is in the upper portion of that, reclaimed BISI there, right? Of course, we'd want to see that support price. And it, to the tick, went to CE. We'll see what it does here, but what do we say this? This was here. These consecutive up close candles, a high probability breaker, because we had what? Stage 1 liquidity and stage 2. Stage 2 was the AM session low. Stage 1, we fell just short of it. So what occurred here? At 236 and 237. Early longs get stopped out because they think that this is a double bottom or strong support, right? This is the inducement leg right here. So when the breaker is being built, longs are getting induced. They're getting enticed to get involved early. Even if they have the directional bias, whether it's all the way up to the highs, whatever the profile is, new week opening gap, whatever. And just note how we're working CE of this new week opening gap. But early longs are stopped out there. We dump lower, trapping shorts that are trying to play a breakout trade, okay, below this low and below the low of the day, that thought this was strong support being broken, and now we're going to continue to dump. They're eager. They feel FOMO that they miss this whole move. Then right after, we see that expansion higher. That accomplishes what? A closure above a premium PD ray. So both sides of smart money were knocked out with these two candles. Does that make sense, guys? Let me know if that makes sense. And the close with 237's candle is important, that BPR. So here, if we were to close above, what did I mention? I would have wanted to see the BPR not get delivered to, right? But since we delivered to it before we closed above the breaker, once we close above the breaker, it's the same thing. Do we want to see it go back down there? No, we've already been there. We close right here, 20,401. That's the close of the 2:46 p.m. candle. The high of this breaker is 20,400.75. It goes one tick into it and then expands higher. There was probably just random buyers one ticking there. I say that as a joke. Come on, cherry on top. Go get that high. Give me what I want. Let's see what ES is doing. ES still to equal highs. See if the market makers pull some sorcery and don't bring it there. Go, brother. Go, brethren. And then really the next point, if we are to get that high, you know, taking it step by step, right? And what do I always say? Sometimes it's going to be real close price ranges like this, right, with key levels. Sometimes it's going to be 10-point intervals until I want to see it close above something or whatever the situation is, right? But here we have the SIBI, which is still important to me. It's right at CE of the new week opening gap. If we close above, I want to see if there's a willingness for us to close above the new week opening gap. Okay? And if we close above the new week opening gap, then maybe we revisit this swing high with this, I guess that's not an inefficiency, just a swing high at 206 at 20,044.7 even. So if they're not going to leave these equal highs, do we come down into this wick? This should be immediate rebounds to the highs. 22 even. Bingo. Damn. This is fun. This is fun. I'm having fun. I need to not go crazy like ICT, dude. I promised myself I would never do that, dude. Okay, so we did get this close above, which was what? Initially, a high probability SIBI. We close above it. So next step, I want to see if we can get to the new week opening gap high, which we just did, but now do we close above it? And remember, what was this? What did we classify this as? This blue box. What did I say for that? See who's paying attention. What should we classify this blue box as? A high probability BISI. Right. We had this inversion. What did we want to see this classified as? Someone tell me. What did we want to see that purple box classified as? A breakaway gap. So you can start to see how these fair value gaps can function. So I hope after this stream, and of course, as you continue, whenever anybody says the 1 minute chart is noise, just know that they're uninformed. It's not to be, a hater or to start anything, but it's just, what to look for. It just comes with time, and it comes with allowing yourself to fail, right? And that's such a key point. So we're still not seeing this close above the new week opening gap. Reclaimed BISI. What do we want to see from a reclaimed BISI with the 2 chance rule? Signatures of strength. What's a signature of strength from a fair value gap? Failure to reach CE, or if it does, expansion away from it. Why is the blue box high probability? Because it's just an extension of the logic I'm utilizing with this yellow box. A reclaimed BISI, I want to see speed away from it. So if this is in the upper half of it, just by extension of that logic, if price is to return there, I'd want to see its wick away from it. Right? Why does it not just go 1 tick into the very high of the reclaimed BISI and expand away and just leave this as a breakaway gap? I don't know. But I know that sometimes it will. And if it does, if I'm looking for a continuation, I want to see speed away. So how do you use that? You don't want to see price get down here, best case for the reclaimed BISI like this, but I would never trail my stop loss super tight there because it still can. Still in this case, after we close above the reclaimed BISI, if we're trying to get week opening gap high as the next target, or this high, 20,044.7 up here, right? I would leave it below here because you have the inversion and the reclaimed BISI. Okay, we're seeing respect to this now. Now let's see, let's check it on ES. ES get the highs, yeah. So we're in this macro window. So this is, let me just shut up for a second and just try to read this. Above macro opening price, we're purging this, right? So the same scenario with this BISI, this is that same reclaimed BISI on NASDAQ. So if NASDAQ or ES, or I guess both, is going to roll over, we want to see it slice through this, right? We don't want to see this support price. So if we're seeing a potential setup occur here, this is the macro inversion in about 8 seconds. And really, I'd want to see if we can get it close below here, right? So we're looking back now, as we went up to a bit of a premium in tax and buy side, we're looking at what price you used to get back up there in that retracement leg, okay? It used this BISI, and what other BISI did it use? This one right here. So if we're looking for a reversal now to engineered sell-side liquidity pre-macro, this is identically the same scenario that we saw at the start of the 150 macro with NASDAQ when we were just focused on that upper fractal. See how there's high probability inversions and we still have this, right? And then we just have these swing lows right here falling short of low day. If we were to close below here, I don't want to see us spend a whole lot of time. I want to see speed to the low. Okay, testing macro open. Let me make sure I'm not missing anything, any SMTs or anything. Macro inversion. And we're doing the same thing here. This was utilized to send us higher. Okay, we're closing below this. I'm going to take this off my chart. It looks like an absolute mess. I'm going to leave this SIBI on here because it was a factor on the move up. And I'm also looking at this BISI that was used that's right in close proximity to it. So it's, my chart's looking like a mess, guys. I'm just trying to differentiate with colors what I'm referring to. So if we close below this BISI and this, what still is until we get closed below bullish inversion, I'd want to see price remain below there if we are going to cut through all this, because this is still looked at as a balanced price range, a high probability breaker. So it's still a tough call here in my opinion. But how I would read the bear scenario is that we would come up into this would remain open. Definitely this one you'd want to see remain open because it's in that new week opening gap and we're seeing displacement away from it. But still, I could argue us bouncing here, right? You'd want to see us slice through this fair value gap, and if we do get that close below, speed to the lows. That's how I'm looking at it. And now this SIBI, so this is a reclaimed SIBI. This is its last chance before it comes off my chart. Same thing with this. I'll give this one more chance per se. Stick with that same terminology, but let's watch what we do here. Checking on ES. See, we test the lower portion of the new week opening gap now. So already we're seeing that SIBI get filled in that I wouldn't want to see get filled in. After we do what? Deliver off this BISI. And which is still, this looks like a mess. The high probability breaker. So you can still argue both sides. This is about to come off my chart unless we dump now and come below it. Okay, this comes off my chart. So this is one of the moments right now where even after we saw great delivery up until this point, and we still could see great delivery in the final hour, you have to ask yourself, do I have a clear idea of what's going to occur? Right now, I don't have a clear idea of what is likely to occur at this current moment, at this very second. I can argue both directions. And that's going to happen more often than you probably want it to, because you want to feel like you need to be pressing buttons in order to be a successful trader and feel like you're making progress. But that's the furthest thing from the truth. I've been yapping this whole time. I'm trying to give you guys a break from my annoying voice. Okay, and guys, especially, we're in the final hour of trading. You don't want to be at least feeling like you need to do something, whether you're by yourself or you're on stream with me or someone else. You know, understanding as the session comes to a conclusion, it's more likely to be less efficient delivery and price. But especially as we mentioned, when we have a scenario where me personally, I could argue both sides. You're just building your narrative, saying, okay, um, it's late in the day. I don't really want to push it here. You can watch price and study it, but okay. I think that's gonna do it for me, guys. I hope you guys learned something. I hope you guys didn't get too sick of me just rambling on. I hope some of my thought processes made sense to you, reinforced some of your learning, some of your struggles. Maybe it made a few things click. Trading is such, you need to have such a deep understanding. Of course, we don't need to trade every single PD rate. You don't need to trade OTE and unicorn and silver bullet or whatever to be a successful trader and brag about that you know the most about trading on the internet or to your friends or whatever, right? But as you gain experience, you want to be able to understand how different inefficiencies should be utilized, how we should view them, what perspective we should have on the market. Just in terms of a situation like this, me personally, I don't know what it's going to do here. I could argue the bullish bias or the bearish bias. So if one thing occurs and now it's going up, psychologically, why would I say, oh, I should have bought at the breaker? I knew it. No, I didn't know it. Right. And when you have that logic, it's like, no, you didn't. You would have bought and you would have felt comfortable and you would have held exactly to your target if you quote unquote knew it. Okay. But, I hope you guys enjoyed kind of just coming into my brain. There's going to be plenty of times where I'm reading price and like now I say I don't know what it's going to do at this very moment, or I think I have an idea of what it's going to do and I get it wrong. And that's trading and that's okay. The main thing for you and for me is to not freak out, let it affect your confidence, and let it affect your next trade or series of trades, right? And just understand it's part of the business, right? And it doesn't make you a bad trader. It doesn't make you change the way you view price. It doesn't mean a model's broken, et cetera, et cetera. So I did record this session. I might post it on YouTube. I don't know. We'll see how crazy I sound when I play it back. But I will talk with everyone soon. I hope you guys enjoyed, and I will talk with you guys tomorrow. See ya.